Hey, everybody. Happy Thursday. Sorry, I'm a little late. I don't know. I couldn't get StreamYard to cooperate. Give everyone just a few moments to jump in, get the notification that we're live, and we will get started. As always, I'm just going to peek on social and make sure everything's working right. All right, we're good. All right. Let's situate everything. There we go. All right, welcome. As you jump in, feel free to let me know where you're from. Happy to hear a little bit about your business, what you do. I will go ahead and jump in because I know that a lot of people catch this on replay later. So we'll get rid of some of the fluff, right? Right. Okay. This is my planner, nothing important. All right. We're ready. We got the water. Okay. So welcome everybody. If you are new here and you're wondering why I am up here talking to you. Well, hi, I'm Bree. I'm Bree Beers of Bree Beers and Associates. I am a CPA, a certified tax coach, an advanced tax strategist, a fractional CFO. I have a bunch of titles because I've taken courses, gone to school, and passed tests. That's what it is. Where I really have gained most of my knowledge and experience and expertise is in my 20 plus years of accounting and my 14, now starting my 15th tax season. Those tax seasons in conjunction with I'm 7.5 years into being a business owner. So that combination of tax knowledge with entrepreneurship gives me, as well as any small business tax owners, that additional advantage of helping you guys as other tax owners and business owners kind of understand what you're doing and the struggles you're going through and the help you need. For the last probably 6.5, 7, I don't know, however many years, I've really been focused on learning the tax code and learning about the ways to save on your taxes, to make sure the ways that we can help minimize what we pay in taxes legally and ethically, right? I believe everyone should pay their fair share, but many of us, especially in the working class and small business owners, are paying more than our fair share. So my goal is to help bring the tax strategies that we tend to think of as reserved for the rich or the elite or the, wealthy. And we think of them that way because, right, those are the people and the companies that have the resources, the people, the time to take advantage of all the tax loopholes and the tax strategies. All right. So my goal is to bring those strategies down and into the working class, into the smaller business owners. All right. And I believe that tax strategy and tax planning is truly the first step in helping the working and middle class, all of us who are here, really begin to build wealth. It's like when I'm on sales calls, I say it's like a raise without the extra work, right? You don't have to bring in extra revenue. You're just taking home more of what you've earned. All right. So today we are talking about self-employment taxes. And there's a lot of different pieces to this, you guys. I don't have my earrings in, which I'm just like, okay, there we go. There's a lot of different pieces to self-employment tax in terms of like understanding what it is, people not quite understanding what it is. This is especially important for those of you that maybe are just starting your businesses. Maybe you're starting a side hustle or you're turning a hobby into a business, right? And self-employment taxes, any taxes, right? Your business income doesn't really play a piece into being taxed until you're making a profit. All right. And so when we talk about profit or net income or taxable income, all right, that's all the money that our business is bringing in, less all the expenses we're spending to run our business, right? Whatever's left is our net profit. Taxable income, a lot of different things, but that number generally is what we're paying tax on. All right. And all of us are we hear about marginal tax brackets, right? What tax bracket are you in? What's your income tax bracket? People understand that, or at least enough to know, like, that's what I'm filing my tax return for. I owe those taxes no matter where your income comes from, right? Whether it's from a W-2 business whether it's from a W-2 job or from a business, we all have to pay that income tax. All right. But a lot of people, especially when we've been in a W-2 job forever or for a long time, and we first move over, good Lord, we move over to being our own business owners, right? To either having a 1099, being a contractor, owning a business. This self-employment tax all of a sudden becomes something we need to be concerned about. So that's what we want to talk about today. So the first thing is, what is it? All right. So we talk about all of us pay our income tax, right? Marginal tax brackets, 22, 24, 37% tax bracket, right? All right. But then there is another type of tax. There's a lot of taxes, but in terms of what money we're bringing in, if you're a W-2 employee, you're also paying payroll tax, right? So think about it, when you're a W-2 employee, or maybe you've been a W-2 employee and you have your gross wages. Let's say you make $1,000 a paycheck, right? But you never see $1,000, right? We know that some of that is our income tax withholding. But we know that, 7.85%, is my math right? Between 7.5% and 8% of that is our payroll tax, right? Is our employee portion of FICA, Social Security, Medicare. All right. Now, once we go to owning our own business or being a 1099 contractor, we don't have an employer who is paying those taxes for us. All right. We don't have an employer that's taking it out of our wages and submitting it to the government. Now we're responsible for it ourselves. All right. So not only are we responsible for figuring out and kind of calculating our income tax withholding, but we have to make sure we account for this self-employment tax now. All right. So W-2 employees, payroll tax, 1099 contractors, and self-employed people, self-employment tax. All covering the same bucket of taxes. Okay. It's your Social Security and Medicare taxes. We talk about it, FICA. All right. And so anyone who has earned self-employment earnings needs to be paying self-employment tax. I think it's over $400 or $600. So very small, very low amount, right? We should be paying this self-employment tax. So what is it? So we said it's Social Security, it's Medicare. What it is, it's 15.3% of your total self-employment tax. Your total self-employment income. So we talk about revenue minus expenses is our taxable income, our net income. That number is subject to income tax and also subject to self-employment tax, all right, of 15.3%. For those of you wondering, 12.4 of that is Social Security, 2.9 of that is Medicare. All right, keeping in mind that every year there's a threshold for an upper amount. So in 2024 it was 168,000. That once you made above that, you no longer paid the Social Security portion. But just know that's not most of us, right? Most of us are kind of falling under that amount. So in addition to whatever income tax we're responsible for, we also need to make sure we're accounting for this 15.3% self-employment tax. All right. So how you do this, when you do your tax return, it's easy, right? You put it into your tax return, you have your revenue minus all of your expenses, that comes up with a taxable or net earnings. All right. But how do we do this throughout the year? All right. And why is that important? All right, well, let's start with the process. So the first, so you have to calculate. You have to know every quarter you're supposed to be paying estimated tax payments, right? We're paying those estimated tax payments each quarter are supposed to be paying your income tax and your self-employment tax. So how do we calculate that? All right, great question. So we want to know what are our net business earnings. All right, so all of our gross income less all of our allowable expenses, that's our net earnings. So that number is the number we're going to base this off of. All right, that's one place where people tend to get confused, or they tend to not be sure what number to use, and they end up using their total revenue in. But you get to deduct those expenses. So let's make sure we do that when we're calculating how much we're going to pay. All right. And then you do get a credit, or not a credit, you'll get a deduction for half of those self-employment taxes. If you have a tax advisor, they're going to be able to kind of calculate this and estimate this a little more in detail. But for those of you that are just starting out, just trying to figure out what amount I should be paying, I tell people to keep that 7.5%, 7.65% in there. Okay. Account for the whole 15.3%. All right. When you're just starting out and doing this yourself. All right. So we're going to take our net earnings. Okay. Revenue minus expenses. We're going to take that number for the period we're paying for. We're going to figure out what our income tax rate is, but 15.3% of that is our self-employment tax. All right, that's our self-employment piece. Okay. I think that's one of the kids' phones. So hold on a second. I don't even know what that is. Oh, it'll stop ringing. It'll stop ringing. I think it's an iPad. So you want to, so 15.3%, all right, is your self-employment tax. And so when people first start, the reason it's important, you guys, is because when people first start out running their business or starting a business, right? And sometimes in that first period, we don't even know that quarterly estimated tax payments are a thing we should be taking care of. We learn, right? And we find out, okay, I should be making quarterly estimated tax payments. Great. How much? Right? How much should I be paying? And then people learn how to calculate, right? They kind of learn, okay, I need to think about that net income amount, right? All my revenue minus all my expenses. That's my net income. And then I just need to figure out what tax bracket I'm in, right? And pay that amount. That's a conservative way to do that. And that's the way we will always tell people if we're not doing it for them internally. That's a great way to do it, to make sure you're paying in enough. You're probably going to pay in too much, but that's fine. But the part that people get stuck on, right, is they do that part right. They do their revenue minus their expenses. They see their net income. They look at their marginal tax rate. They look at what tax bracket they're in, and that's the only amount they pay. So let's say the most common tax rate or tax bracket is 22%. So they say, okay, 22% of the $10,000 that I made this of net profit, I'm going to make a payment for $2,200. And they do that, right? They pay their income tax portion each quarter. They're doing great. They go to file their tax return and they owe money. And they're like, what the heck? Why do I still owe money? Right? And it's because they didn't account for that self-employment tax piece. All right. So if you guys kind of do that rough math, 15.3, even if you're in that 22% tax bracket, you add that 15.3% self-employment tax, you're sitting at 37.5%. All right. So when people, some tax advisors are like, just say 40%, like that's a nice number that will probably catch most of your tax payment, right? That's where it comes from, because they take the most common tax bracket, which is 22%. They add in that self-employment tax of 15.3%. That equals 37.3, right? So they round up. So you want to make sure that the self-employment piece gets accounted for, or at least that you're aware of it, so that when you do owe money, you're not like, what am I doing wrong here, right? It's your quarterly estimates have those two pieces, the income tax and the self-employment tax. All right. And then we talk about quarterly estimated tax payments. So when do you pay them? It's not on a quarterly basis. It's close, but not quite. But we'll go over those real quick. So April 15th. So that first month, you're paying for January 1st through March 31st. So when March closes, you get your rough estimate of what your net income tax is, and you pay that by April 15th. All right. The second payment is only for April and May. I don't know why, guys. I don't know. But it is due June 15th. So you just got to remember, let me keep going through it. Okay. Third quarter, is September 15th. That's for June, July, and August. And then your last one, your fourth quarter payment for September, October, November, December is technically not due till January 15th of the following year. Why do they not quite do it on a quarterly basis? I couldn't tell you. I'm sure there's a reason. I don't know it. So the important thing to remember, if you remember the days, April 15th, June 15th, September 15th, and January 15th, you'll remember that they're due for the month that just passed. So your payments are due 15 days after the period you're paying for closes. Okay. And a lot of people still mail in their payments. I would suggest doing it online, irs.gov. If you can't do it, if you're a bigger business, you might have an EFTPS account set up, but definitely do it through the IRS, especially with, I mean, guys, mail gets lost between the postal system and the IRS. Things get lost, things get misplaced. Doing it electronically, you have the proof, you print it out right away. You can, if down the road the IRS does not show your payment, you're able to pull that payment up and they're able to find it and allocate it. So an important piece to this, you guys. So yes, self-employment tax, it's not a big thing, right? But it's important to remember, it's important to understand that you are subject to it if you have any sort of earned income, ordinary income from a business. All right. And the hardest part for people is that calculating piece, right? It tends to get a little overwhelming. They're like, like that's, I can't, that this seems like a lot of work. But if you guys have good record keeping in place, this is not hard. All right. And so I think if you've been around for a while, you understand, like you hear me kind of sound like a broken record, that good bookkeeping is important for a variety of reasons. And this just happens to be one of them. Because if your books are in order and they're being closed every month and it's reliable, up-to-date information, then all you have to do when March 31st closes and you're done with those books, or your bookkeeper's done with those books, is run a P&L for that period of January 1st through March 31st. Scroll down to the bottom of the P&L, see your net income, and calculate from there. All right, it takes out one of the biggest stressors of doing these quarterly estimated tax payments. All right. So yeah, like this one, a pretty easy one, you guys. I've been getting a lot of questions on what is self-employment tax? Why do I have to pay it? What is it? Why? And at the end of the day, what it is we have tons of taxes we pay, right? Income tax, payroll taxes, sales tax, property tax, and payroll tax is one of them. Okay. So when you have a job, you and your employer are paying your FICA, Medicare, Social Security. When you're no longer working for an employer, right, you're not getting that W-2 and your employer is not giving, not sending those Social Security and Medicare, FICA taxes to the government, you are now responsible for it. And that's what self-employment tax is. So the most important piece to remember is that there are, when you're talking about your tax return and what is due when your tax return is due. All right. There are those two pieces. It's the income tax. What tax bracket are you in? And it's a self-employment tax, 15.3%. Keeping in mind, you do, and I was trying to just kind of stay out of the complexity and the weeds, you do get to deduct half of the self-employment taxes as an expense. All right, just like when you're an employer or when you're a when an employer pays an employee a W-2, when I have an employee, my wages that I pay to the employee are business deductions. So are the payroll taxes I pay on their behalf, right? So the IRS does give you a deduction for the employer portion, half of your self-employment tax, but it's important to remember that deductions are not dollar for dollar. Right. So we can't just say, I'm only going to account for 7.5% or 15.3, half of that, 7.65%. All right. And the reason that is because remember, deductions are only valuable to are worth whatever tax bracket you're in. They're not a dollar for dollar deduction. Okay. So in this instance, if you spend $1,000, let's say, however you have $1,000 in self-employment tax due, you can't just cut that in half, say, I only have $500 due because my employer portion is deductible, because it's not dollar for dollar. And this is something that we will get into in a future training when we talk about the value of deductions. All right. But it's just important. You can't just say, okay, I'm only going to pay half of it. It's a little more complicated than that. All right. So for the ease, when you're first starting to do this, the easiest way to kind of understand this is like 40% is a solid number to start with. That's your 22% most common tax bracket. Again, you're going to be overpaying in this instance because we have marginal tax brackets, but that's not what we're talking about today. But you got your 22% most common tax bracket plus your 15.3 self-employment tax. That's how much safely you can pay each quarter or put aside in savings. Some people do that instead. But whatever method you use, make sure that each quarter you're accounting for these taxes as an expense, as an expense that has to come out of your business money. Okay. Yeah. So that is that. Next week, you guys, it's the first week of the month. So we're doing Q&A. So there will be some posts in the Facebook group on our Facebook page reminding you to get your questions in. And you can DM those to us, or you can, reply to them in the post that you see. And my assistant, my VA, will compile those for me. I have a few left over from last month that I have as well. But the best way to ask your questions is to show up live. Because if you show up live, I will answer your questions in the chat first. They kind of take priority. All right. If you know you're not going to be able to make it live, then go ahead and send them in through any of those social media channels, and they will get put into the plan, and I will answer them, and then you can watch it on replay. All right, you guys. Well, thank you as always for joining me today. And if you guys have questions or topics that you want to hear about, please, share on the Facebook page. Really, where this content every week comes from is what's coming through our inbox, what's coming through our DMs as most common questions. Then we come on here and help you with that. All right. So I will see you guys all next week for our Q&A session. All right. Have a good weekend, you guys. Bye.